It strikes me that climate change has become a bit of a catch-all for some dubious investment idea these days. So why should investors care about it?
Well, there's two angles. First, there's the impact on the environment. Today, there's a 1 million year anomaly in CO2 concentrations in Antarctic ice cores. Spikes in CO2 are historically followed by spikes in temperature. And secondly, there's a very exciting investment opportunity resulting from the regulatory response.
Is that response the introduction and trading of carbon emissions credits? Won't that just raise energy prices and ruin our economy?
There will be costs, but there will also be benefits, including the projects funded by the auction revenues, the acceleration of innovation in things like energy storage and transmission. Plus, it encourages fuel switching into renewable alternatives.
That all sounds very commendable over the long run, but what's in it for me today?
Well, if you're an investor in companies that are required to buy these carbon credits, you are effectively short the carbon market. Therefore, the carbon market would be a great hedge to that macro risk.
Surely that requires me to start investing in a risky niche asset. Why would I do that?
The beauty of these markets is that they have been designed to create scarcity over time. And that's because there's a cap on the number of credits available. As more companies are obliged to offset their emissions with carbon credits, these markets shift from a surplus to a deficit. When this happened in the European market, prices started to accelerate higher. Therefore, there could be an advantage to being early.
It sounds like I've missed the opportunity. What's the bull case then?
This market is still in its early stages. As time goes by and more companies are required to meet their compulsory targets, that should drive the carbon price higher. This happened in the EU system in 2019. In the UK and US, those inflection points should occur in the next couple of years. And even now, European prices still have the capacity to rise significantly too.
European, UK, and US markets? How many are there?
The four most liquid are EU Emission Trading System, the California Cap and Trade, the Regional Greenhouse Gas Initiative in Northeast USA, and United Kingdom's Emission Trading System.
So how do I choose which one to pick?
If you want to maximize your chance of catching future price surges whilst maximizing your liquidity characteristics, it's probably best to gain exposure to all of them. And you can do that via Kraneshares Global Carbon Strategy ETF, KRBN. It's a simple one-stop shop.
But don't these ETFs get exposure via futures? That always makes me nervous in commodities because rolling futures can incur costs, can't they?
Carbon futures are more like financial futures than commodity futures. They should not incur excessive charges for holding and rolling them. And what's more, these futures markets can be more liquid and easier to access than the physical market.
Okay, I can see their potential value proposition, but my investors will need more convincing.
Well, here's the extra benefit. Carbon credits help with portfolio diversification. Historically, they have been relatively uncorrelated with other assets and can help improve returns for a specific level of volatility.
So, if I understand this correctly, they've been structurally designed for prices to rise over the long term. They can provide portfolio diversification. Global regulators are forcing through these changes, and the Kraneshares KRBN ETF provides exposure to the main markets in an easy-to-access format today?
Yes, this is happening now. Governments are on board, corporates are on board, investors are on board. The wheels have already been set in motion. Plus, you may just be helping a behavioral shift to investing on a more environmentally sustainable footing.